How I got approved for a business loan at Chase Bank. Continuing on with my process. So the number 3 step here was my email application. I was nervous that a bank wouldn't take me serious because I was black. I've heard so many things of banks, denying people because you're black, and, obviously the history in this country, there's no denying it. Mortgages, redlining, it is what it is. We're not denying history now. I just want to personally believe, me living in LA, that the racism wasn't going to stop me from obtaining this loan. During this application process, they did not know what I looked like. The loan officer I was talking to, I never met him. He could have maybe did some research on me and maybe saw who I was. But the fact of the matter is, the only thing he asked was send me that tax return. That was it. Point blank, period. It was just all about my tax return, my profitability, and my credit. Hey, what's going on, everybody? Welcome to the 9% Show. I am your host, Steven Burton. And here at the 9%, y'all know we keep everything 100. If I haven't done it, not doing it, or not about to do it, it will not come out my mouth. So please like, subscribe. We appreciate all the support that's been coming our way for the 9% Show. All you 9%ers out there that want to join, the 9% Club. Shouts out to y'all. Continue to like and subscribe and just share this content, and we go super spread our message out there for the entrepreneurs out there. But today we are talking about a very important topic, a very popular topic, and we're going to talk about funding. We're going to talk about how I got approved for a business loan at Chase Bank. I'm gonna walk you through the process that happened for me. But before we do that, like always here at the 9%, we go take our toast to the 9%ers out there. As always, I got my scotch on there. I like a little scotch and ginger ale, but anyways, so we're talking about funding. We're talking about bank loans and things like that. So the specific loan that I got, the loan program that I got, was actually a line of credit. And for those that don't know what a line of credit is, it's pretty much you have this, it's similar to a credit card, but they give you a limit. Let's say it's $100,000, and you can pull from it whenever you want to. And then you only pay interest on what you pull out at a time. If you pay it down, and you don't own interest. Like it's always that line of credit is always available to you. Those are really great for business wise because it allows you to get through slow seasons. It allows you to maybe ramp up for like inventory. It just gives you that bridge and have that security and that safety net of always having some capital that you have access to. And once you get approved for it, I'm trying to remember how long mine was. I want to say it was 5 or 6 years. And so, at that point, you could reapply for it. You got to show your books again and all that type of stuff. But when I started the business, I knew it was a goal of mine to get a major bank capital for a few reasons. One, like I said, I was always aware of wanting to have that positive cash flow, wanting to have access to capital, because you never know when you're going to need it. And then two, it's always the best rates. Like if you can actually go through a banking, go through that whole process, you get the best interest rates. If you're doing, unsecured loans or like credit cards, the interest rates are like 20% up, you know what I'm saying? So my line of credit is like, they base it off the prime rate. So whatever the interest rate of the Federal Reserve, and then I'm a couple points on top of that. But you're talking like, a credit card is 20-something%. My line of credit is like, maybe 6%, 7%, now with interest rates going up. So it's a big difference and a cheaper way to borrow money when you need it. So I'm gonna break down this process and what it took for me to go through that whole, to get approved and get funding, and just walk you guys through that and give you some tips on what to expect and how to prepare yourself for it. Okay. So, the number one thing we're actually going to talk about, speaking about, prepared, is actually number one is being prepared. I planned for this moment, I originally joined a local community bank when I first started my business, thinking, the business relationship will make a difference, being a local bank and they would know my face and all this type of stuff. It didn't quite work out like that. I really didn't even like the bank as far as its technology and the mobile banking and a lot of things. It was just slacking it. But I was just like, I was willing to deal with all that stuff. And then being e-commerce, I wasn't really going into the bank that much anyway. All of my transactions was digital and stuff like that. So I wasn't really, having the need to go into the bank and deal with, checking and all that type of stuff. But I thought that it would make a difference. So I would say maybe a year and a half before maybe 2 years at this point, because I ended up switching over to Chase. But I tried to go in there, introduce myself, see who the loan officer was, this, that, and the third. And long story short, because we're not really talking about that, it just didn't make a difference. I mean, I think more so my books and my numbers probably wasn't as great as it needed to be. Now that I know what it took to get it, it was probably partial of that, but it just wasn't. From a banking relationship standpoint, I just learned that banking relationship isn't necessarily me walking to the bank. Hey, Steven, how you doing? Blah, blah, blah. Could it be that? Yeah, I guess maybe, but that wasn't my experience. So a banking relationship is literally having accounts with that bank. So I decided to switch over to Chase. Chase was actually my first business credit card that I had. So I was already, I already had an account with them. And so I decided to switch my checking over to them. Technology and everything was great with them. So I decided to switch over and use Chase as my bank. But also a thing that I learned, even making that switch, is Chase is actually one of the hardest banks to get a business loan through, get a line of credit through. They have really high requirements, and we're going to talk about those things here. But and being prepared, banking relationship did matter. So like I said, I joined Chase and I had a checking with them, I had a credit card with them. I always made my payments on time. I had a positive relationship with them. Also being prepared, also your credit score. Know what your credit score is. Your personal credit always matters in business. I'm 8 years into Perfect Tux and my personal credit still matters. Don't let no one online or anywhere tell you that it's not, that your business can just be the strength of everything you do, your business credit. Can it be? Possibly, I don't know. I'm just telling you personally, 8 years in, I haven't experienced it. My personal credit always matters. They always ask for my personal social security number. They always ask for, even during this process, we're going to talk about some of the documents and things like that, but they cared about, they sometimes care about your personal tax return as well as your business tax return. So your personal credit does make a difference, and it did make a difference for this line of credit. That's how they really determined. It was a big part of my interest rate that I got with them. Just like a mortgage, just like anything else, a car loan, it's the same in business. Your personal credit score makes a difference. So if your personal credit is not right, I spoke about this in other videos, but I would literally wait on starting your business until you approve your credit, because you're going to need it. Unless you're just flush with cash and you're never going to need to get access to capital, or your business is just going just through the roof and your numbers are just crazy. I haven't personally experienced that because I have good credit, so I don't know how much that would weigh. But they do have minimum credit score requirements. So if it's too low, you can't even have a discussion. So make sure your personal credit is right. Okay. Mine personally during that time was in the 800s. I mean, just being real. I came from this space, was also being prepared for me was a thing of I'm at the top tier of my approval chances with this bank. I always want to make sure that everything about me is at the top level of to be approved. I don't want any reason a credit score can be the reason I don't get a business loan when my business is kicking butt and I have faith in my business. So I'm personally the type of person that's just going to prepare and make sure everything is great. The little things that you can do with your personal credit and things I did when I knew I was about to apply for this loan through Chase was just lowering my debt. Any debts I had, your debt to income ratio, all this stuff matters, but it's all tied into your credit score too. I mean, a big percentage of it is your payment history and then also the amount of debt that you have. having business credit cards that only report to the business credit. It does not report to your personal credit. It's very key. So you can have balances on your business credit cards where it doesn't negatively impact your personal credit. So you want to be strategic there. You really want to understand credit. You really want to be at the maximum credit score when you apply for this stuff. Just set yourself up in the right way. Also, part of being prepared is having the right documents. Documents are so important. And when I say documents, I mean your tax returns, your profit and loss, your balance sheet. They can request any of this information, and they probably they will request this information. So you just want to be prepared. You want to have everything documented. You want to have everything correct. You want to make sure that you actually have accurate bookkeeping. Your numbers are fine. My personal situation, I went through a situation when I first started the business. The accountant that I had, I didn't have a bookkeeper. I didn't know the difference between a bookkeeper and an accountant. I was the bookkeeper. Little did I know, I'm pushing the buttons on QuickBooks or whatever the case may be, and then I'm giving it to my tax preparer or my accountant, and they're not looking at nothing. They're just submitting whatever I give them. I feel some type of way about that situation, but pretty much my first 2 years in business, my numbers was all jacked up. It wasn't until I found the proper bookkeeper that was able to fix my numbers, go back on a couple years and fix those years up. And it just makes it, I feel so much confident that I can go to a bank and give them some numbers, and I feel that this is a true representation of my business. Going back to that first banking relationship, I was showing them documents when they were wrong. They were straight up wrong. They wasn't accurate. So it was I can't really knock them for not messing with me at that time. But, if your documents are accurate to where you believe your business is, because sometimes you could be flush with cash, you could be feeling it. And then sometimes what you're physically doing on your business checking account might not add up to your paper, your profit and loss statement, your balance sheet. So it's a funky balance there. Also with documents, I made sure my bookkeeper that I had at that time was in tune and we had the same goals. I made sure my goals was that they knew my goals. So when it came to tax returns, when it came to your profit and loss statement, we're going to talk about profit a little more after this, but making sure your team and your accountant is really, if you let them know, okay, I'm wanting to apply for a business loan, they'll give you the right strategy or tell you the things you need to do for your books to be successful in that. Okay. A business plan actually did not matter. They did not ask me for a business plan. You would think, sometimes they might do that. I don't know. Online says they might. I have a business plan, so I was prepared. Again, I'm prepared for all situations. So I would say have a business plan, or at least an executive summary. That's kind of like a one-liner, no more than 3 pages, kind of really top line of what you're doing, what your business is doing, competition, your numbers, and where you plan on going, and kind of in the quickest sense. But when I applied for my line of credit to Chase, they did not ask for a business plan. It just was what it was. Going to number 2, we're going to kind of talk about stick on that profit, and it's really your profit matters. I actually, preparing for this episode, I went back to my email and talked to the loan officer that I was dealing with. I looked up those emails, and to just keep it 100, I had contacted him when I was interested, and I knew I wanted a line of credit, and I did not. It was maybe 5 months before, and I wasn't ready to apply. I was just, asking him what type of documents are needed. We were just having conversations back and forth. He was asking me about my business. Around this time is when I met my bookkeeper that I still have today, and she was fixing all my, my books and things like that. And I was just being real with him, okay, no, I'm not prepared to, apply right now. My bookkeeper's fixing some things up, blah, 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 get my numbers right. And they were like, yeah, just whenever you're ready. So when I actually told him that I was ready to apply, the first thing he asked for, not an application, not how much money, not my credit score. Before even doing anything, the first thing he asked for was to send him my latest tax return. That was the first thing, one tax return. And Now that I know now, at the time, I just sent it to him like, I didn't really, whatever, this is what you were asking for. But it goes to show that was his way of weeding people out. Like, you could tell by the tax return if Chase Bank is gonna mess with you or not. Like, are you in a position, are you even approvable? Like, it was really that thing. And then his next response after I sent him the thing was like, oh, your numbers are looking really great. I'm thinking you deserve to have X amount. Do you want to apply for X amount? Like, he literally told me the maximum amount that I could apply for. And then after that, it was just smooth sailing through. But the main thing that you need to understand is that your profit matters. What showed on my tax return was that the business made a profit, and that business profitability then goes, however you structure things in your tax setup. But for me, I'm a LLC and treated as an S corp, and that profitability went to my personal taxes or whatever the case may be. But you're able to see that, and the reason why they want tax returns is because you can't lie. I mean, Donald Trump tried to stretch the truth, and you see what, 10, 20, 30 years later, they coming for him too. Because the thing about it, when you put this stuff on numbers and you submit it to the government, you submit it to the IRS, that is the true record keepers there. Like, if anybody's ever, applied for a mortgage before, they don't just take your word that you're filling out the application. I made X amount, I made whatever. You have to give them the right to get copies of your tax return, or you can sign a paper that they can request your tax transcripts. Like, because you can say whatever you want to say, how much money your business made, how much whatever the case may be. But if you did not report that to the IRS as, hey, my business made X amount, it does not matter. Your profit and loss doesn't matter because anybody could generate that. Like, none of that stuff. The only official record keeper of all this stuff is what is on your business tax returns. Okay. So please, you have to be profitable when you're approaching major banks. Matter of fact, most lending places, they want to see that. If they're not seeing that, you're either getting some small amount of loans, or you're also paying an extreme amount of interest. It's just something crazy. But for this specific situation, they need to see that you're profitable, because what your profit is showing them that the business has the capability of paying this loan back, of making these payments. It's just like when you're a regular W-2 employee. Your income matters. They do all these calculations. You could be going to needed to buy a car. They do the calculations and they say, well, this is how much you can afford. It's based on your income, based on them running your credit, based on the debts and all the things you have to pay. It's the same thing in business. Okay. Your income is your profit. Okay. And then don't get me wrong. Let's say you did make a profit, but also on your tax returns, it lets you know things. Okay, you paid. It breaks down everything that you paid in your business if your books are being done right. I learned things with building the Perfect Tux store. It was honestly the first year that we actually didn't make money, and we lost money for the year because we built a store. But little did I know, there's little things in there that if anybody looks at my books or looks at my number, they say, oh, your true profit would have been this, but now we see you did this expansion and blah, blah, blah. Like, they have a way of looking at all this stuff. So you don't necessarily always need to show a profit. It's pretty much just showing kind of positive cash flow that you can pay back this loan. But you want to put yourself in a good position. You want to strengthen your financials. Ways to kind of doing that is in what I did, again, knowing that I'm going to be applying for something. You want to be strategic with your financials. You want to say, you know what? For this year, I'm holding off on this big expense. If it's literally December, November, and you're about to apply for a loan in January, February, the next year, hold off on that expense. Don't charge it until January 1st. So that expense is on your next year's tax return. Like, you have to be strategic with it. You got to maybe cut costs. Like, cut down on the costs that you're spending, boost your revenue, whatever you can do to get your profitability scoring higher. is what you need to do. That is the main thing. And for me, the fact that all he did an initial checkpoint of like, it wasn't no application, wasn't nothing. It was show me your tax return. And that's what got the whole problem. After that, it was smooth selling. Like everything else was just cause. But keeping on this about showing profit and things like this, if you're in a business where you're scared to show a profit because you don't want to pay taxes, okay? Maybe you don't want to have merchant fees, and you're telling everybody to Zelle you or everybody to Venmo you, and you only accepting cash. That's good and dandy, and you're like, okay, I don't want to pay taxes. But again, when it comes down to banks and the things they care about, all they care about is the official paper. Like, you can be rich in your pockets, but if the government don't know you're rich, or the government don't know you have this cash, or the government doesn't know your business has made all this money, it does not matter. Similar thing happened during COVID and the PPPs and the EIDLs and all the support they were trying to put out there. If the government doesn't know your business exists, or you didn't, you're cutting corners and you're taking cash and you're not reporting this XYZ, all they can go on off is what you are reporting to them. Okay. And that's all the banks care about too, because that is the truest record. So make sure your books are right. Make sure your profit is at its top tier level, before you apply for all this stuff. It makes a difference, and that's all they care about. So continuing on with my process. So the number 3 step here was, obviously was my email application. And then, and it kind of led to this, okay, let's just talk about the application process. So this was by email. Okay. I was nervous that a bank wouldn't take me serious because I was Black. I've heard so many things of banks, denying people because you're Black, and, obviously the history in this country, there's no denying it. Mortgages, redlining, like, it, like it is what it is. We're not denying history now. But there was something that told me back in, I think that was 2018, 2017. Yeah, I think 2018 when I applied for this. I just want to personally believe, me living in LA, that the racism wasn't going to stop me from obtaining this loan. I had to go through the process for myself. I could read everything online. I could read books and all this stuff and assume all this type of stuff, but I had to go through it for myself. And the fact of the matter is, during this application process, they did not know what I looked like. The loan officer I was talking to, I never met him. He could have maybe did some research on me and maybe saw who I was. But the fact of the matter is, the only thing he asked was send me that tax return. That was it. Point blank, period. And then after that, it was cool. So I initially got approved and everything that happened without being seen, like with nothing. It was just all about my tax return, my profitability, and my credit. Okay. My credit mattered. Again, like I already said, that was all it was about during the application phase. And it was really super straightforward. It wasn't a situation where, don't be afraid of these loan officers, because honestly, they want to do business with you. That's the whole point of banks. Like, they want to lend money. Like, that's how they make money. So don't be afraid to have conversations with banks. Don't be afraid to have conversations with loan officers. Go into a bank, sit down with them, tell them what your plans is, tell them what you're plotting, tell them about your business. They will tell you the best way to be approved. Like they will let you know. Again, with my situation, I was letting him know 5 months in advance, like, okay, I'm not ready now. I will be ready. Blah, blah, blah. What do you need? Like, have that conversation. To them, as long as they can get you through the underwriting, like, that's all they care about. Like, I'm sure he had some commission, or he was getting a bonus off of, approving accounts and all that type of stuff. But like, you have to get through the underwriting. So like, don't be afraid of of big banks. Just make sure you are prepared, and hopefully this video is allowing you to be prepared when you're dealing with a major bank. Okay. The next step after that, and so this was the 4th step, which was actually pretty shocking to me. This all kind of happened all around the same time of like, show me a tax return, oh, this is great. This is what I think you could prove for. During part of this application process, he wanted to come to my office. Like, he was like, oh, we needed to have, there's some things, I need to explain to you in person, or you need to sign in person, blah, blah. When's a good time to stop by your office? And I was looking at this chain again, preparing for this episode. And I was like, oh, well, I'm actually not going to be there. I'm downtown right now. I'm going to be there. He said, oh no, it's fine. I'll come tomorrow. Like, it's fine. Whenever you're available, just let me know. When he finally got there and we had, some conversation after, signing the stuff I need to sign and all that type of stuff. I mean, he straight up told me that was part of the approval process, like physically seeing stuff. It still didn't matter with the tax return. Like on my tax return, it says inventory. Inventory is X amount of dollars. They're banking, with this particular line of credit, my inventory was some type of collateral, like, basically on your terms. Like, I mean, it was a thing that helped me get approved. But like, if I'm not paying my bill, they could come in here and take my inventory and try to get their money back. Like, that's pretty much how it works. But they wasn't just about to say, oh, you say you have an office. Oh, you say you made this much. Oh, you say you have 50,000 in inventory. Oh, okay, approve. Like, granted, I got initially approved sight unseen, but they wanted to come in and look around and check things out. In talking with them, I found out that, like, if anybody goes, doesn't pay their bills and they get to collections or whatever the case may be, they actually track down the loan officer who approved that loan and go to that file and see why he was approved. And if there was anything wrong in that situation, the loan officer can be in trouble, can get fired over that. Like, this is a conversation we was having, like, once we, everything in the business side was handled, we was just having a, regular conversation, real down to earth dude, whatever. But like, it was shocking to me that like, do not get it twisted. When you are dealing with major banks, they are not about to they're not about to let $100,000 just go out the door. This ain't a car. This ain't a mortgage. Okay. They got collateral in the mortgage. They got collateral in the car. If you don't pay your bill, they'll take that stuff from you. The repo man go come and get it. And for a business loan, they need to make sure this stuff is accurate. So like plan for a site visit. If I didn't have an office, I don't know what it would have been. I mean, maybe they would just have me come into the bank and, maybe they would have asked more questions. Maybe they would dive more into it. But he literally came there, saw the operation, saw what was going on, and that helped him, confirm everything that we've been talking about. So that was part of the process there. And then after that, the last part, number 5, is the funding. Okay, it's funding day. It's all good. Honestly, this process did not even take that long. I was trying to remember how long it took and looking at some of the emails that we had. And honestly, it wasn't no longer than a few days. It was fairly fast and I had access to this money. To sum all this stuff up, what really took long in all this was just really being prepared and prepping myself for being prepared for this. Also, I don't think I mentioned this, but I knew exactly being prepared as well. I made sure I applied for this loan during my busiest season, right after leaving my peak season. I was applying for this thing when I did not need the money. And it's always my number one rule with funding and things like that. You never apply for credit, you never apply for funding, a loan when you need it desperately, because they will be able to tell by your credit, your credit score, your balance sheets, all this type of stuff is mechanism for them to check what your financial health is. You always want to put yourself in the best financial health when you're applying for this stuff. So I applied during the time right over my peak season where I had tons of money in the bank, tons of money. Again, banking relationship, they're seeing the money I have in the bank with them. I'm applying for this. They probably felt good that I wasn't about to open this line of credit and take $100,000 out, take $50,000 out instantly and be gone. They felt good that I wasn't going to abuse it based on my financial health. So the timing was important. Also understanding my debt, understanding what was reporting to the personal credit, understanding what was reporting to the business credit, understanding what was just being reported to balance sheets and things like that. I mentioned before in a major gym right here is if you're going to have some loans and things like that, I highly suggest like merchant loans through who your credit card provider is, especially if you're e-commerce or you have a physical store. Maybe you're dealing with Square or Stripe or PayPal or Stripe. I think I already said Stripe. All of these companies, they offer sales advances, but they don't get reported to nothing. So I'm not saying that you should, it should technically be on your balance sheet. Put it on your balance sheet, but you create your balance sheet, or hopefully your bookkeeper creates your balance sheet. So there's ways to finagle some stuff around to put yourself in the best position. If you have a little debt, if you're working about timing, like you need to think about all this stuff when applying for a business loan through a major bank. Okay. So, yeah, that was my process. Okay. I am in the 9% and I am in whatever percent of somebody as a business owner that got approved through a major bank, let alone a black male, okay, that got approved through a major bank. It is possible as long as you are prepared for it, as long as you, as long as you're prepared for it. That's all I can say. Being prepared with your documents and having profitability and your credit score, good or great, I don't think you'll have a problem with it, okay? So that was the episode for today. Thank you so much for tuning in. Please continue to like, subscribe, share this content, get it out there. We really appreciate it. Until next time, I'll see you at the next episode of the 9% Show. Peace.